Good morning, amazing traders. Good morning, good morning. How are we all today? Sorry for the delay. We had some issues that were out of our power, but we resolved it now, hence the TDA. Let me know in the chat box if you can hear me, please. Can we all hear me? Let me know if we're together before we go straight to business. Yeah. All right, so welcome to another market color session held by Value Flow Trading and powered by our preferred broker, Okta. It's going to be an insightful session, so yeah, stick around, pay attention, and get value from this session. Before we go deeper into today's analysis, I would like to ask that we please send the flyer and the links to friends who would find this really helpful. Send it to traders, send it to people who are interested in becoming traders, so that they can also benefit from this session that we host daily at absolutely no cost. It won't take anything from you. So just 30 seconds, guys. 30 seconds. Kindly share the flyer to people. This will be very beneficial too. All right. I'm going to believe we're already doing that now. So I'm just going to proceed with faith in you that you're already sharing the flyers. So we're going to be starting off from AUD USD. As you might know by now, I analyze commodity currency pairs, and I'm going to be starting today's analysis with AUD USD and going into NZD and then USD CAD, right? And of course, the 1 week time frame as usual to get our weekly trend. So what do we see here now? Looking at the AUD USD weekly time frame, we can see that we are bearish, right? Price already took out this level, and this seems like some sort of retracement to continue selling to. I did know. Apologies, I'm so sorry. I guess my screen stopped sharing. I'm going to fix that now. You can see the chart now. All right, so I believe you can all see my screen now. Sorry about that little hitch. As I was saying, starting off from the weekly time frame, we can see that we're currently bearish on AUD USD. Price already took out this level, and this is some sort of retracement to the downside. So we're going to wait for the screen to load. All right, and it's done. On the daily time frame now, if you've been following our TDA sessions, you would notice, immediately look at this chart, you'd see one thing. The box strategy on AUD USD has been formed. So we have our shoulder here, a quick sweep down, a grab of liquidity to the upside, another structure that took out our point B, and then a retracement into the forceful move that went down to take our point B, right? And in the process, what did it leave? It left a fair value gap, which is where price is currently in and trading downward from, right? So you see how much more it is even supporting our sell bias of the weekly time frame. We're currently starting to react based on this fair value gap that we see from the swing that took out our shoulder. Now, on the 4-hour time frame, you see reactions here. Price has already taken out this level. So AUD USD is a sell. AUD USD is a sell. You could have been in this trade. I remember seeing this, and I saw this from Saturday actually. I already saw the pattern being formed. So if you are taking this trade here, this could have been a possible entry. Go to 5-minute time frame to look for a variation pattern to sell AUD USD to the downside, right? You could have been in this sell. But yeah, moving forward about USD to the downside. So let's look at the USD as well. Let's look at the weekly too. And of course, weekly time frame as usual. So structure is also to the downside. You should already know that NZD USD and AUD USD are pretty much similar to each other. On the daily time frame, what do we see? We also see the same shoulder pattern already formed on NZUSD, pretty much similar to what we see on the AU. Shoulder here, a quick move downward, sweep of liquidity, another structure that took out our point B. This would have been our point A, point B, point C. This now becomes our point D that took out our point B, and then another structure being formed, which is our E and our entry. Now, if you look at this level, you'd see that price already tested into the fair value gap that was left right here. If you know the box strategy, you know that when you're trading the box strategy, there are two things you want to see on the swing that takes out our point B. You want to look for either a fair value gap or an order block, right? And you see the fair value gap here. So price already reacted based off that fair value gap, which we have here as another one here actually. Price already reacted based on the fair value gap and dropped. So this explains why price didn't take out this level, and we see some sort of reaction based on that fair value gap that we see on NZUSD shoulder pattern. The same thing on the far time frame, we're starting to see reactions to the downside. So our bias for AUD/USD and NZUSD are to the downside, pretty much similar. We could have entered when this engulfing pattern formed on the 1 hour time frame, right? So I've entered when this formed, and then go to your 5-minute time frame to look for a variation pattern. And when I say variation pattern, I basically mean almost like a stopper shocker, right? A stopper shocker. Let's see if we saw anyone here. Just going to look for the line that we marked on our 1 hour time frame to see if any was formed. So you have a visual representation of what I mean. Okay, so we have one right here. This could have been a probable entry. Let me zoom in so you see it clearly and mark it up. So this could have been an entry. We saw a buy, a little candle, and then a big engulfing candle that swallowed the last two candles. That could have been the point where we entered this sell. We also have another one right here. Although this doesn't really look perfect. This is not the ideal setup we want to see on the 5-minute time frame, but it also counts. All right, so we could have been in the sale already, but moving forward, our bias on NZUSD and AUD/USD is a sell. Now let's also look at USD CAD. On the weekly time frame of the USD CAD, following structure, we see that price has been bouncing around this level. We see some sort of equal highs and equal lows being formed. But looking at our most recent swing, price traded into it, broke below this level, and is giving us a sell structure. Then you come on the daily time frame and you see consecutive higher highs and higher lows being formed, which we have here. But price is currently trying to take out this level, and which I'm going to mark right here. So price is currently trying to take out this level. I think it has actually, except we want to mark all the way to the week and wait for a bodily candle to take it out, which we see that it was just a week that broke below. And we know about levels. When we want to see a level broken, we want to see a bodily candle break it down forcefully. So we're going to be watching to see if that happens. We also see how USD CAD is reacting based off this resistance level right here. All right. So following market structure on USD CAD, there's something that I noticed here. Let's zoom out and get a clearer picture. So we have a sweep here. We see how price swept out this level right here. And then we see price broke. We already have our line there actually. Price broke below this level. So this is our point A. Price broke below point B, right? And then starting to buy. So what I think USD CAD is going to keep buying, either trade into this fair value gap and react downward, or it's going to buy and take out all of this liquidity here. So I'm looking at USD CAD trading all the way above here to take out this liquidity, right? So my bias for the USD CAD is bullish. Now, although our weekly time frame is still showing us a downtrend, but remember, price is fractal. So whatever our lower time frames do, our higher time frames will eventually do that, right? So I am more bullish on USD CAD. Now we can also look at US oil. We can also look at US oil briefly. Why are we looking at US oil if I just analyzing USD CAD? Because Canada, which is a part of you can see USD CAD here, right? Now Canada is a major oil exporter, and the Canadian economy is closely tied to the performance of the oil market. So traders usually look at US oil to see what US oil is doing, and this now gives more insight into what USD CAD is doing. So if you come to a US oil chart and you see that US oil is selling, then it's telling you that the Canadian currency is kind of weakened. So what do you expect when you see the Canadian currency weaken? You should be seeing more buys of the USD CAD. That basically means that the dollar is strengthening against the Canadian dollar, right? So let's do a quick analysis here. So we're still bearish on the weekly time frame of US oil. Then we'll go on our daily time frame, still bearish. Zoom in to see if price has taken out any level. No, it hasn't. So we're bullish on the daily time frame of US oil. Weekly time frame is showing us a bear move. Daily time frame is showing us consecutive structures being built to the upside. Whereas the next level I see US oil buying into, you could mark up this level right here. Now let's see 4-hour time frame. On the 4-hour time frame, we have more structures. When you look at it, the first glance, you're looking at more structures being built to the upside. Then you zoom in and you see that price took out this level, right? Price took out this level right here. So on the 4-hour time frame, where is the most probable place that US oil could trade into on the downside? Because it's important to have both the up and down bias and see to be more certain of which plays out. So we have a fair value gap here, which we expect or we want to see US oil trade into. If it doesn't, we analyze and see what we missed and then go with the flow of the market. Remember, we don't force the market to go our way. We look at what the market is doing and trade in that direction. Now we're seeing structures of US oil being formed to the downside, right? On the 1-hour time frame, even more clearer, structures being formed to the downside, which is basically supporting our USD CAD buy bias. The more US oil keeps forming structure to the downside, the more our USD CAD bias will be strengthened because it's telling us that the US oil is low, so the Canadian currency is also low. If it's also low, USD CAD is going to continue buying, right? So we're going to mark up this level as well to see if price eventually takes out this level. So we know that US oil is still buying. So what happens when we see US oil buying and USD CAD also buying? That's basically telling us that the dollar currency itself is also strong while the US oil is strong, right? So they could be going in the same direction, but ideally, what we want to see is the US oil doing the opposite of the USD CAD, right? So with that being said, a brief recap, USD CAD bias is bullish and our AUD USD and NZD USD bias is bearish. For those of us in our TDA Plus group, if you see entries, we're going to send it down to the group chat so you can also take advantage of our trades which will be taken. If you're not part of that group, you should be a part of it. What are you waiting for? Right? It's simple. It's very, very little criteria. You're not paying us to be a part of the group. You're literally funding your account, and we also allow you to copy our trades on the floor. And those who have been following our analysis so far can testify that out of a month back-to-back trade calls, 3 weeks have been in profit, which is huge if you ask me. So you should be a part of that group, right? With that being said, let me know if you have questions. Let me know if you have any questions before my colleague comes on to analyze gold. And sorry, the network is kind of slow, so it's taking a while to. You need to refine AU using lower time frame so that we can see where to join the sell. There was need for further. All right, I'm going to do that. Value flow. Oil sell means USD buy the USD CAD. So quick analysis on gold. There are different, if you've been joining our TDAs, you realize that when certain people come up, they analyze certain pairs. So when you see my colleague Lakon on stand, you know gold is going to be touched. When you see CJ, Cynthia, you know GU is going to be touched. When you see me, commodity currencies. So I'm just going to quickly go back to AUD/USD to see. I had mentioned this. I said, if you had seen this formation here, this base formation we had, and the continuation pattern that was formed, you could have gone on 5-minute time frame to look for entries, right? You could have gone on 5-minute time frame to look for entries. So let's zoom out to see. If we're going to be filming this right now, the place where we could have entered this trade was when we saw the variation pattern being formed. Now this trade has already started going. It has gone about 30 pips, right? So we're going to go on our 15-minute time frame to see if we see any fair value gap we can mark up. When the trade has already gone and you feel like you've missed that trade, what you can do is to mark fair value gaps that you see on time frames like the 15-minute time frame. So if price keeps selling and forms any fair value gap, you could attempt selling AUD/USD. But remember, today is CPI, so be careful. Price already tapped into this fair value gap, which you see right here. Price tapped in and started to sell, has gone back into that zone. So for now, I'm going to say you should wait to see a clearer move. We don't want to force ourselves in the market because we think the trade is leaving us behind. Right? So when you keep watching the AUD/USD chart, if you see a fair value gap marked or printed on the 15-minute time frame, you can mark it up, wait for a retracement into it, and then you take a sell of AUD/USD. I hope that's clear. Value flow oil. Those people who have used our sentiment know that most of these other biases or bringing in comes from sentiment. For those of us who have our value flow models, I'm sure if I go take a look at my value flow models, I'll see a clearer perspective of what I should be doing on the commodity currency pairs. But yeah, any more questions, guys? I hope that was clear. Who asked that question? Potter's effects, was that clear? All right, so because of time, we don't really have time. We started really late today. So I'm just going to, all right. I'm just going to call on my colleague to come on and do a quick analysis. But please, was that helpful? If that was helpful, let me know in the chat box, guys. Was that really helpful to anybody? Was that helpful? All right. So we're going to take a quick short break before my colleague comes on board. All right. In the meantime, keep sharing the flyer, keep sharing our links to people. Keep sharing the video to people so they can also benefit from this. All right. With that being said.
Good morning, everyone. Once again, you're welcome to today's top-down analysis, which we now call the market color. For today, the 12th of March, 2024, we're happy to have you all here. So straight away, we're going to be going into the charts, and we're going to be looking at, in this session, the Dixie, GBP USD, and Euro USD. And then we'll wrap up with a commentary, and then we'll be ending today's session. So sit tight and enjoy the ride. Straight up with the Dixie, looking at the daily time frame based off what we were expecting to see today and yesterday. Now looking at the daily time frame, as of yesterday, let me take all these chart markups a little farther away. So based off what we had yesterday, we're expecting okay. So we're expecting the Dixie to trade a little higher into any of these regions. We had two places we wanted to see the Dixie trade into. The first one was this fair value gap right here. If you go to the 4-hour time frame, you'll get more reasons why we drew that. So we're going to check that out quickly. And then there is another fair value gap above, somewhere around 61.8. And then there are old lows residing at that same level. So we have points of interest for the Dixie to the downside. Also considering how Friday's candle closed, we were more bullish on the Dixie for yesterday into today. Today we're expecting CPI sometime around 2:30, 1:30 or 2:30 GMT plus one. We'll confirm the time. All right, so that should possibly inject liquidity for the Dixie to the upside. That is what I'm thinking. I want to see the Dixie move to the upside with that fundamental release coming out, and then we expect further shots on the Dixie. Remember, we have all these points of interest for the Dixie to the downside. But then, due to the expansion of last week, we want to see Dixie come back to the upside. Now, looking at what happened yesterday, we saw the Dixie create some buys and then a retracement. We still intend to see the Dixie retrace into this zone. This whole range around here, I expect the retest of the Dixie into it at least, and then possibly to grab liquidity above by taking out this high and trading into this fair value gap and an old low, what we refer to as IOFED. These are the things we want to see happen on the Dixie. Okay, so it's already showing us signs that it wants to do that. We're seeing the buys in the markets right from yesterday into today, and we expect that before the end of the week, it should achieve at least this first objective. So we have two objectives. The first one is to trade into this level, and then the second objective is to start selling off from this region. Okay, so that is what we are expecting for the Dixie. Once the consumer price index comes out, we are expecting that the news is going to be very positive for the dollar, so that we can see it align with what we have based off technical analysis. So we want to see a combo between technical and fundamentals telling us the same thing, which is a short-term bullish Dixie. All right, so that's what we're expecting to see. On Euro USD, if you remember yesterday, said that I would want to sit on my hands. Yes, I know Euro USD is going to sell, but it's a reversal, not a reversal now, it's a counter trend. Yes, that's the right word. It's a counter trend. But then I did the risk to reward, and I found out that it's not enough for me. It's not worth the risk. All right, I'll be risking close to 20 pips to get a minimum of maybe 30 or 35 pips. So it's not worth the risk. It's not even up to 1:2. So I said I'm going to wait for the Euro USD to trade into any of these two levels, and then I'll be willing to buy it all the way up here. So I had a markup that looks like this yesterday. Okay, and then this. So this is up to 1:3, almost 1:3, because I want to see the Dixie trade into that level. So this is almost 1:3, and it's something that I'll be willing to take the risks for. So I would rather wait for Euro USD to trade into this level. Of course, I'm not going to enter blindly. I want to see my entry signatures show up here in any of these two other blocks, and then I would be willing to now go long on the Dixie. So this other block above here may serve as liquidity in form of external liquidity because of this low here. So I'm suspecting they may make a play for Euro USD to trade into here, trap in early buyers, and then take them out, then finally trade into this other block below, and then use this other block as the point of interest to induce the buy. Okay, so once price gets into this place, you be careful so that you don't fall into that trap in case it's a trap, but it could be the original order block that will send price upwards. What am I going to around this first order block, I'll be willing to take the buy. Of course, I could still be wrong, even with all those extra caution that I'm going to apply. Whereas the market, risk to reward is going to save you. Once you're risking little, you won't be angry when you're stopped out in the market. Okay, so I'm patiently waiting for Euro USD to trade into any of these two levels before I take my buys. All right, and surely once that happens, we're going to give a heads up to our guys on the TDA Plus group. And then for GBP USD, if you remember yesterday, I said I wanted to go short on GBP USD during the TDA. Now you can see how far that has fed. Currently, we're running 50 pips plus on GBP USD based off where we signaled that we wanted to take our trade from. We're still in the sell, and we're looking to terminate the sell somewhere around this 50% level, because now this is also counter trading, but it is rewarding because, I mean, what GBP USD is giving you 50 pips, 50 to 80 pips for Euro US is only offering 30 pips. So it's better that I take GBP USD. And then based off sentiment, we are seeing a weaker GBP compared to Euro. We're seeing a very weak GBP. So for the dollar trade, GBP USD is like the best move amongst all the other dollar pairs. GBP USD is like the weakest. You can see that on FinViz once it loads. So you notice that GBP USD is very, very weak. So that was one of the reasons why we preferred the GBP trade compared to the Euro USD trade. These are more what you're going to get when you enroll for our sentiment course. And I think if you want to start taking trading serious and focus on a particular pair, that should be a goal and a target for you before the end of the month. All right. So for GBP USD, I'm waiting to see it trade into this level before I start considering a buy on GBP USD. Where are the levels I'm considering a buy? Because if you're not in the sell, you're already late. Now I'm looking for a buy somewhere around this 50% level. Okay, I'm looking for a buy somewhere around this 50% level because it looked like the origin for the new expansion that created this buy side inefficiency, sell side imbalance around here. Okay, so this is like the origin of this expansion. So this is one of the places I'm looking out for a buy on GBP USD. The second place I'm looking out for a buy is the structure that was broken to create this swing to the upside, which is around 61.8. So I have two levels for a buy on GBP USD. Once price trade into any of the points of interest, I'll start waiting for my confluences to show up before I take my buy. Now, a quick look at FinViz. You can see that GBP USD, before we even turned into FinViz, you already said we're anticipating a very weak GBP. Now, you can see how weak GBP is compared to where the dollar is. It's around 0.5 minus 0.54% weaker than the dollar. So a GBP USD sell is like the best trade from yesterday into today. Based on CPI, we want to see how the narrative is going to continue or possibly change. So this is all we have for you based off the currency pairs that we've analyzed. We're looking forward to CPI, the consumer price index, sometime around 2:30 GMT plus one. And then we'll be watching to see the new narrative or a continuation of the previous narrative. Definitely during our New York session market follow, we're going to be analyzing the outcome of the CPI and then what it interprets for us as Forex traders. At this point, we're going to be taking commentaries and we're going to be taking questions. Good morning, sir. If you have any questions,
everyone. Good morning, everyone. Not much to say. You guys have done an excellent job. What I learned from Abby's session, the reminder about the 5-minute entry, variation entry pattern for entries. Now, those who keep asking for entry signature, the box structure in and of itself, the box strategy is an entry signature. So if you just look for the box on the 5 minutes, look for the shoulder, look for the sweep of that shoulder, look for the break of structure of the sweep and of the shoulder, then look for a fair value gap, and then just mark that fair value gap. It will be very small, of course, because it's 5 minutes, and wait for price to return to that fair value gap. That's an entry signature. Abigail also gave us aka Abby Dollars, aka Sabi Abby, aka not Sabinus the investor. This is Sabi Abby the investor, having one or two, So she also gave us an entry signature on the 5 minutes, which is basically the morning star or the evening star variation with Fibonacci. All right. So you can be taking note of all these and be backtesting them to see which one works best for you. All right. But the issue is targeting liquidity, targeting inefficiency. You take your entries at a point where liquidity is created or liquidity is consumed, and you take your exits at a point where liquidity is consumed. All right? I hope this makes sense. So great job, guys. Sorry once again that we were a bit late for the TDA, now called market color. But as always, it was worth the wait because we delivered value. Over to you guys at the floor. We'll touch base in the New York session. It will be great for all of you to be around at the New York because we'll do post-CPI analysis. So make sure you're around for the New York session. By that time, CPI should have come out, market should have digested it, price action should be ready, and we take it from there. All right, guys, over to you, CJ. Thank you. Cheers. God bless.
All right, thank you very much, sir, for your commentary. At this point, we would be rounding off our top-down analysis for today. Remember to mark your points and expect that price is going to be in your favor. I mean, in favor of the trades that we're going to be taking. Thank you very much, everyone, for joining today's top-down analysis. Remember, we have our offer still open. We have the ATM cash flow training, the March edition coming up soon. If you want to get the softest landing into the trading, into Forex trading generally, I think ATM cash flow is one of the courses that you should have in your bucket list. All right, and then if you have any family member, spouse, friends, partners, or colleagues that also wants to trade the Forex market but needs the course that is going to teach the person in the simplest way possible and also teach profitable strategies, the ATM cash flow is the course for you. So do well to enroll for the ATM cash flow. Send us a WhatsApp on our WhatsApp number, and we're going to follow you up for payments and then inquiries. Then finally, just so you know, all the specific entry and exit points from all the trades that we are analyzing, all the markets and the charts that we are analyzing here on the live market color, we have an exclusive group where we share all the entry points, the exit points, the trade management, and every other thing that has to do with the trades that we are expecting and anticipating from the market. To gain access to that group, you do not need to pay any fee. All you need to do is to take a 3-step process and you'll be through. First step is to sign up with our preferred broker, Okta, using the link in the chat box. And then the second step is to fund your account with $500, $1,000, even all the way to $20,000. And the last step is to send us a screenshot as a proof that you funded your account using the Telegram link there on your chat box. After you've done that, within 3 minutes, you're going to be added to the group and you can start trading alongside your favorite traders here on the floor. Until we meet again by 3 p.m., thank you very much for joining this top-down analysis. Remember, it was brought to you by the Value Flow Trading team and powered by your favorite broker, our favorite broker, Okta. So do well to sign up. Cheers and God bless.